Yahoo Finance executive editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this Monday morning. Ambassador Mike Waltz ringing the bell at the New York Stock Exchange to recognize the 80th session of the United Nations General Assembly, and climate leaders getting things underway over at the NASDAQ to kick off New York Climate Week. Now, there's no shortage of things for investors to think about this morning. Everything from President Trump's new plan for the H-1B visa system to a surprise sell-off in crypto. One should also keep an eye on a lot of Fed speak this week, including from new Fed member Stephen Miron today. All right, let's get a pulse on the early action with Yahoo Finance senior reporter Brooke DePalma at the NASDAQ in Times Square. Brooke.
Good morning, Brian. Happy Monday. We're off to an interesting start on the open right now. All three major indices slightly leading downward after a record high last week, largely led by the Federal Reserve's decision to cut interest rates by a quarter point. And now we're seeing investors sort of in this wait and see. We have the NASDAQ leading the downward momentum ever so slightly, down about 0.1%. The S&P 500 down about 0.2, and the Dow really moving lower this morning, only about 0.3%, largely led by Disney, JP Morgan, and Caterpillar being seeing some red this morning at the open. Largely investors in a wait and see approach right now, as they are expected to hear from Stephen Miron today, as well as Jerome Powell tomorrow. And also we have their preferred inflation gauge, the PCE index, set to come out on Friday. But I do want to take a look at some specific stocks this morning that are seeing some interest among investors, and that includes three stocks that are set to join the S&P 500, including AppLovin, MCore, and Robinhood. All three are added to the S&P 500 as of this morning. This is part of a quarterly rebalancing. They're going to replace Caesars Entertainment, as well as Enphase Energy and Market Access. Those were now moved to the S&P Small Cap 600 Index. Also take a look at some stocks that are impacted by that latest announcement on Friday afternoon that President Trump, or rather the Trump administration, is going to approve a $100,000 fee on H-1B visas. And we are seeing some of the tech stocks over in India seeing a bit of downward momentum based upon this morning. As you can see on the screen, Infosys, Tata Consultancy Services, and Tech Mahindra all seeing downward momentum. That's largely because this H-1B visa, it'll be a one-time fee of $100,000. It will only impact new visas, but we are seeing some pressures on the stocks today. Also keep a lookout for the Mag 7 major tech stocks like Amazon, Meta, that tend to employ these sort of workers that have and need an H-1B visa. So we'll be keeping a close eye on all of that this morning. But once again, all three major indices in the red to kick off this new week.
All right, thanks so much, Brooke. And coming up, cryptocurrency sliding, gold hitting records, plus Elon Musk and President Trump potentially reconciling. All that's next on Opening Bid. Welcome back to Opening Bid. Citi is hammering down the gas pedal on its call. General Motors analyst Michael Ward lifted his price target on the stock to $75 from $61, which assumes 27% upside from current levels. Ward acknowledges GM is very leveraged to the outcome on trade agreements between the Trump administration and, well, the rest of the world. Ward notes that higher tariffs reduce first-half earnings by $1.3 billion for GM and should continue to adversely impact second-half results. But he thinks GM has done a good enough job to mitigate tariffs, and trade uncertainty has fallen with these two factors in place. Ward believes GM stock should trade on a higher price to earnings multiple than it does today, around a paltry 6 times forward estimates, according to Yahoo Finance data. All right, here's what else I am watching to kick off the week. Crypto cracks. Some of the most visited ticker pages on Yahoo Finance this morning are crypto-centric, such as Bitcoin and Ethereum. The activity reflects a more than $1.5 billion drop in the value of the digital asset market cap today. Chatter is that the crypto market is in search of its next upside catalyst. Now that the Fed's rate cut is out of the way, is this the start of a broader crypto rout? We'll discuss on the Opening Bid Roundtable. And it all starts with a handshake. President Trump and Tesla billionaire CEO Elon Musk were seen shaking hands and sitting next to one another at the Remembrance services for Charlie Kirk on Sunday. This, the first time the two have been publicly seen together since the notorious dust-up in June over the president's One Big Beautiful Bill. So what's the read-through here for Tesla? Recall Tesla stock rallied hard in the wake of last year's election because of Musk's close ties with Trump, but then the stock tanked in June when the two power brokers feuded very publicly. Corporate America worker crackdown. President Trump's new plans for the H-1B visa plan has sent shockwaves through a surprise to corporate America, especially the big tech sector who are relying on a free flow of overseas workers. We'll look at the potential impact to the bottom lines of America's biggest companies. Here on the Opening Bid Roundtable, Tim Urbinovitz, Innovator Capital Management Chief Investment Strategist, alongside Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Good morning to you all. Tim, I'll start with you here. I'm going to flip the script and start on the H-1B visa issue here. It's pressuring some stocks that are very reliant on this visa system. How big a risk is this to big tech?
Well, I think there's a couple things to think about, Brian. When we're looking at the action this morning, we're specifically dialing in on a stock like Amazon. You know, they're the biggest consumer of these types of visas, and we don't see that big of a move in the stock this morning, which I think is encouraging. It's selling off just a little. But when we take a step back, we really think this continues to add fuel to the momentum that we're seeing in international equities, continues to beg investors to think more about that international allocation as you have the U.S. implementing these steep and restrictive type fees. You know, we think that opens the door for places like Europe, like the UK, like China, and the momentum that we've seen there. We think it's just more fuel to see that momentum continue.
Tim, is this a big enough issue where you have to question buying Amazon stock here?
I don't think you do. And again, I think if you look at the stock, when I looked at it just a few minutes ago, I think we were down 30 to 40 basis points somewhere. So it's certainly something to think about. I think it puts more pressure on wages, could pressure margins a little bit, but I don't think it's a big enough issue where you're going to see a huge drop or huge concern over the stock. And I think the price action this morning really reinforces that.
Brooke, you've been tracking some of the stocks that are heavily tied to this morning.
Yeah, one of those stocks, or rather three of those stocks that have heavily impacted is more of those tech firms that are based in India. Those include ones like Infosys, Tata Consultancy, and Tech Mahindra. And those have largely been impacted, but pre-market, or rather at the open, we saw all three of those down a couple of points. And that really speaks volumes to the impact that this could have on tech firms based in India who heavily rely on these sort of visas in order to employ their workers with some of the biggest, firms here in the U.S. And so it'll be interesting to see this way play out. As you can see, those have extended into the market open this morning, with Tata and Tech Mahindra feeling the majority of the impact, down more than 3%. And so it'll be interesting to see this way this plays out. It is worth noting that it is a one-time fee. It only applies to new visa holders. And we did hear from the press secretary over the weekend, really outlining some of those key barriers around this announcement as well.
Tim, let me get back to you real quick here, too. You mentioned that this may lean towards one getting more favorable over overseas stocks. Why is that the case?
Well, I think there's a lot of reasons. And again, this is just one more here, Brian. But when we look at everything going on in the U.S., you have the Fed cutting rates into a backdrop where we think the economy is still strong, inflation is still high. We think this is bearish for the dollar. And the Trump administration, the president, has been very clear. He wants to see the dollar weaken. And when we take a step back, you look at when does international typically outperform the U.S. 88% of the time it's happening when the dollar is weakening. And if you look at IFA outperforms when the dollar's weakened by about 11% per year. So that is pretty significant. This is just another issue where you see, this is an opportunity with tech to step in, get some of those workers to be able to really compete in AI and compete against the U.S. in tech. So not in and of itself something that we want to just go all in, but everything else, when we look at the macro together, it's just another reason to really reconsider that allocation in the portfolio, Brian.
And Inez, amidst all this uncertainty, new day, new record price for gold.
Yeah, that's right. Look, gold right now is on pace for its best annual gain since 1979. Gold has rallied 40% year to date. This is after a rally of about 27% last year. I mean, this is unbelievable when you look at what has been happening with gold. So much of this, of course, is because of the Fed easing and expectations that the Fed will continue to ease. But you also have that weaker dollar that was just talked about as well. That has also been contributing to gold prices going higher. You've seen the dollar index down 10% year to date. And then you've got central banks that have been adding gold positions and that have been really accelerating their gold positions quite a bit since 2022. So all of this is very bullish for gold going forward. You do have some analysts that are talking about watch out for a pullback, but nonetheless, I mean, you have some price targets that are going into 4,000 into the second half of next year. So the street's still bullish on gold.
And at the same time, Inez, you have gold hitting records and you have this sell-off that a lot of folks awake to on cryptocurrencies, notably Bitcoin, Ethereum getting hammered. It's hard to figure out what the next catalyst is in crypto after a big year.
Yeah, it is. And this is one of those moments where investors look at crypto and they say, oh, yeah, that's right. It is very volatile. I mean, we have seen Bitcoin in this sort of trading range between 110 and 120. But still, you're looking at Bitcoin that's down right now. And as you mentioned, Ethereum, and it has been, though, a bullish year for crypto. I mean, Bitcoin is up 20% year to date, not as much as gold, but still, nonetheless, look, this month tends to be seasonally weak for Bitcoin. So and it tends to be a bit better for altcoins. But nonetheless, October should be a better month for Bitcoin. But keep in mind that crypto tends to sort of be a precursor for what happens with equities. So not a good sign that we are seeing this pullback with crypto in general.
Tim, do you view Bitcoin like stocks in the sense that if stocks were to pull back here, perhaps you buy that dip? Do you do the same as it pertains to Bitcoin and crypto widely?
Well, I think, taking a step back, Brian, when we look at the value of crypto or you look at the value of gold, we really think they solve the same issue right now, which is a store of value and really helping mitigate a lot of the risk that you see with the deficits, the big, beautiful bill, and the Fed cutting into this environment. We do, however, Brian, we view them very differently in the portfolio. Gold, we view more on the risk control side, where Bitcoin is clearly, and crypto is a risk asset. I do think one of the things that's been so interesting, I think really opening up this crypto world to more investors, the volatility, a lot of them, they just can't stomach that, right? But when we look at some of the innovations in the ETF landscape, I look at an ETF like QBF, you're getting 74% participation on the upside in Bitcoin, but then you have a 20% floor in place against losses. That is significant, and in our asset allocation models, that really gives us the ability to hold that in different places and increase the allocation, which with everything going on, we think those asset classes like gold and Bitcoin are so important and really opens up the spectrum for investors who may be more risk averse that wouldn't have been able to hold otherwise. So we're continue to be bullish on the asset class. We've been that way for a very long time now, Brian, and this is just new avenues as a way to hold it.
Who has also been bullish on crypto and an innovator, it's Elon Musk. Tim, I don't know if you saw him shaking hands with President Trump yesterday at the Charlie Kirk Remembrance Services. Any read through there for Tesla? Like I mentioned at the top of the show, there you can see that exchange there yesterday. That Tesla shares ripped higher right on through the election because of this close relationship, and then the stock got absolutely hammered in June when it totally blew up. Are you inclined to get interested in Tesla here?
Well, Brian, I think the good news here is that it's clear that shareholders don't want to isolate any one piece of the Tesla base, and that was difficult, obviously, back in June. So I definitely think this is a positive. I think if you looked at the action pre-market, Tesla was one of two Mag 7 stocks that was up. Was it on this or was it on the Piper Sandler upgrade on the price target? It's tough to tell. But one thing that we continue to caution on when we look at a stock like Tesla is just the valuation. And I know if you look at the Piper Sandler report from yesterday, they compared Tesla to Amazon, the multiple back in 2012. They can grow into it. I do think there's a big difference here, though, Brian. You're talking about a company that was $100 billion back in 2012 to a company that's $1 trillion today. It's much more difficult to grow into a multiple when you're talking about the size that we are looking at today. Also, we view this space, whether it be autonomous driving, the robo-taxi game, the automaker in general, it's a lot more competitive space. There's a lot more players trying to get in. So with that, we're cautious. We think risk management is very important with a lot of these names that are running like Tesla at these crazy valuations. So good to see the peacemaking there, but not sure that does much for us in the medium to long term.
Brooke, I wanted to see a hug. I guess you could appreciate a handshake, and maybe I'm reading too much into it, but I think a hug would have been more bullish for those Tesla investors out there.
Brian, well, we didn't get to see all the pictures, so maybe a hug happened, a handshake for sure.
Good point, Brooke. Good point.
We know that President Trump did, or rather Elon Musk did approach President Trump, and he had mentioned to reporters that they had a little conversation, and they had a very good relationship, but it was nice that he came over. And so really, maybe a hug, maybe it was a handshake, but the two had talked, and we are seeing, as Tim had mentioned, this momentum this morning, perhaps, maybe because of that. But it's been interesting to see see Tesla over the past few days really see this upward momentum returning to where we were at the start of the year. And, not just because of that moment yesterday, not because of the Piper Sandler moment, but also this new, Elon Musk reinvesting in the company about 1 billion shares. We also heard more about that pay package that I believe could be upwards of $1 trillion based upon the company's performance targets. And so we're seeing this momentum. That certainly was nice to see this moment yesterday at that remembrance ceremony as well.
Inez, a fist bump would have been bearish.
A humanoid fist bump or a humanoid hug. Look, Soz, the stock is up 50% since early June at the height of the feud between Trump and Musk. So definitely the market likes to see them getting along. Musk out of politics, and if he is next to the president, investors like to see them getting along.
All right, really good insights here. Big thanks to the opening bid roundtable, Tim Rabinovitz, Brooke DePalma, and Inez Ferrer. We'll be right back with more on Opening Bid. All right, welcome back to Opening Bid on this Monday morning. And look, markets are going to start the week near record highs, despite lots of concerns out there. You have the H-1B visa program. You have valuations at record highs, but nonetheless, stocks still having that bullish vibe. Inez Ferrer and Brooke DePalma are still here with me. And Inez, I want to come over to you here because in large part, stocks at record highs reflect, I think, everything we have seen from the Federal Reserve over the past few days. Of course, that interest rate cut this week will get more Fed speak. It will be very interesting to see how these Fed members align with what we just heard from the Fed last week.
Yes, and to see what their comments are about the future and what any signals, basically, because the market has really been looking at signals forward. And so it is expecting this easing cycle to continue. And if you have Wall Street analysts that have been talking about the fact that the Fed started easing in a non-recessionary environment, and that has been good for stocks. So despite the fact that you are seeing markets near all-time highs or at all-time highs, you are seeing that, okay, yes, it's been a big run, but can it go further? And you have stats out there that signal perhaps it could. You may see a pullback near term, but you have Carson Group that put out this stat that the last 20 times where equities were within a 2% of all-time highs and the Fed cut, you saw stocks going higher every single one of those times. And UBS signals something similar. Cutting into a non-recessionary environment tends to bode well for equities in the medium term.
Brooke, last word to you. I really spent the weekend thinking a lot about who benefits from rate cuts, and it really is consumer spending. We get a couple more rate cuts before year end. You have to think that benefits some of America's largest retailers right in the middle of the holiday shopping season.
Yeah, what we've heard from retailer and specifically CEOs that I've spoken with over the past few months is really they're looking for this inflow of these rate cuts to impact the amount of money that consumers ultimately have to spend. Of course, taking into consideration the latest tax bill, taking into consideration mortgage rates, which are impacted by a multitude of factors on top, and more so long-term rates as opposed to these interest rates, short-term rates. But really what I heard from Best Buy, what I heard from Lowe's CEO is really looking at those rates coming down in order for consumers to be able to spend more, borrow more, and ultimately invest back in their homes as they really have pulled away and not spent as much on discretionary. We do know that consumers are about to spend 5% less, I believe, according to PwC this holiday season.
Brooke and Inez, thank you for bringing the fire on this Monday morning. Really appreciate it. Coming up, Julie Hyman has you covered for Market Catalyst. We'll be right back.